AI is transforming digital wallets into super wallets with voice commands, spending insights, and chatbots. Adoption is surging, especially among SMBs, and 82% are already on board. To discuss this, we have Tony Wood from Deloitte and Professor Sumit Agarwal from NUS Business School. Now, jumping right into our topic, how can banks prepare for the growth of digital wallets in Asia?
Last 5 years, we've seen dramatic growth in digital wallets across the region, particularly in the C2C and B2C sectors. I think for banks are being led by the SMBs, and I think there's a number of things that are causing delays. So the sector still remains quite fragmented, particularly driven by regulation and the licensing processes being market specific. I think when we think about what banks can do, there's a lot they can do in terms of thinking about how they partner with wallet providers, with fintechs, with merchant and others, but also preparing their risk management processes for real-time monitoring and dealing with more complex AML processes.
I think they can take multiple approaches to handle this. First, I think they could partner with fintech companies, collaborate with leading digital wallet providers like, say, GrabPay or Alipay or Paytm to embark on banking services within their ecosystem. They could also invest in infrastructure, mobilize core banking systems and APIs to support real-time mobile-first payment capacities. Okay, they can also think of focusing on financial inclusion, tailoring services to the underserved and underbanked populations by offering them wallet-linked microloans, savings, or insurance products. And finally, I think they could strengthen their cybersecurity and compliance programs. For example, they could have eKYC, localization of data. This will help them actually build their customer base.
But just for better understanding on what's happening, why are SMBs adopting digital wallets more than enterprises?
There are many good reasons for this, but why don't I just highlight two? The first has been a real push by a number of governments across the region, focused on adoption. The barriers to entry have been lower for the SMBs, and I think also digital penetration and riding on the back of the strength of a number of the consumer apps and super apps across the region have supported the SMB sector. I think for banks it has been slower because they have legacy technology and infrastructure, and perhaps many of their clients have a more structured way of moving money.
Yes, so that's a good question. Again, clearly for SMBs, the barriers to entry are lower. For example, the setup cost is low, there are low fees, and the POS hardware is not required. So this right away makes them very attractive. The customers are also demanding it. Customers are increasingly relying on mobile and QR code-based technology. And so SMBs are essentially required to provide the services for their customers. Another thing could be access to financial tools. I mean, all these tools that customers are using and engaging with is forcing these to engage more. Finally, I think there is this flexibility and mobility. SMBs, especially in retail, food, or delivery, value the mobile nature of these digital wallets and into doing these quick transactions.
Now let's talk about its impact. What effect will digital wallets have on the future of payments?
We see a huge impact, some of it social and some of it business, but already we can see a significant decline in cash usage, with countries like India and China standing out, and growth in financial inclusion with digital payments allowing previously excluded individuals and businesses to come into the financial system. Then we will also see a significant push from governments around central bank digital currencies, which will be integrated into wallets over time.
You can think on multiple impacts. First, think about cash. Cash will be displaced. The optimal choice for the consumer is, do I pay with cash or do I use these digital wallets? And some of my own research has shown that people will start using less cash and more of the digital wallets. The other thing could be enhancing financial data, because once you don't use cash and you use digital wallets, there is much more data flow about the consumer and the products that are being sold, that is being collected by the wallet and other data providers. There could be cross-border efficiencies. Right now, with other payment mechanisms, we don't know if you're using credit cards, it's very difficult. There's transaction fees and many other fees that get associated with cash. You have to convert cash to other currencies. With digital wallets, it's going to be seamless. And so you'll see many more cross-border transactions or efficiencies these wallets will essentially create. I can also think about digitized financial integration, because a lot of these products right now we use are one-off, and we'll have some payment methods, some loan methods, some investments. Now these digital wallets will essentially bring a lot of this together.
Thank you so much for sharing your insights, Tony and Professor Agarwal.
Thank you. Thank you.
Thank you.
Once again, those were Tony Wood, AP Banking and Capital Markets Leader at Deloitte, and Professor Sumit Agarwal, Lo Tak Kwong Distinguished Professor of Finance, Economics, and Real Estate at NUS Business School. For more news, visit AsianBankingandFinance.net.